Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am No FOMO Charts. Today is Friday, July 24, 2026. It's past 1 o'clock a.m. Eastern Standard Time here in the USA. Welcome everyone. This is a swing trading and investing YouTube Charts video. Next week we have very important stock earnings releases from companies such as PayPal, Seagate, SK Hynix, Visa, Microsoft, Lam Research, Meta Platforms, Robinhood, MasterCard, Apple, Amazon, Coinbase, and Strategy, just to name a few companies. There's a lot of earnings next week, especially Tuesday, Wednesday, Thursday. USA economic data, President Trump is scheduled to speak 2 times next week. Unemployment claims data is coming out, also crude oil inventories and natural gas storage. Recent news, USA stock market earnings season continues. President Trump announced new tariffs ranging from 10% to 12.5% across 60 economies. These are new tariffs. Google released its faster Gemini 3.6 flash model tiers for search. Their earnings report, they did report increased capital expenditures, but negative free cash flow of over negative $5.5 billion negative free cash flow. That's what caused that negative investor sentiment, the sell-off. Tesla also missed EPS expectations, and their free cash flow decreased due to spending on AI, Cybercabs, and Optimus. So that also had a pretty severe negative investor sentiment. Google, however, just want to clarify that they did beat EPS and revenue expectations. It's just the CapEx and negative free cash flow. So going into next week, that's probably going to be my mindset. That's what I'm watching out for. Besides obvious EPS and revenue and top line, bottom line numbers, I am looking for what about the CapEx, the capital expenditures on AI, and what happened to the free cash flow? Is it changing a lot, or what's going on with these companies? Because most people just look at EPS, or they don't even look at earnings at all. They're just looking at news. So it's really important to focus on the real big, important economic data and stock earnings. Let's start with SPY. SPY, S&P 500 ETF. On a weekly chart, it looks like, just on a chart perspective, this weekly double top could come true. The rejection below resistance of 755. Now our big support I'm looking at is 728 down here. If we lose that, this will turn into a large double top, and probably we're going to retrace all the way down to somewhere like 683 if that happens. The only time that happened not last year, but 2 quarters ago, is because of the geopolitical wars and some tariffs as well. So maybe that's happening again. If we get another round of tariffs, and if it happens too long, too much, if there's bad earnings, maybe we'll sell off more. But this is the stock market. Even though on a daily chart, there is that head and shoulders as well. I'm not going to be extremely scared, but let's put the targets up. Could be negative 2% to the downside, which is very close to 727. And the neckline is actually diagonal in this case. We are barely below that, just starting to downtrend, but earnings could reverse this. That's why sometimes the market likes to just consolidate to the side. It doesn't always have to go nonstop uptrend or downtrend, although usually that happens. So for me, if we're going to pull back down in a bear case, I'm waiting for a very deep crash, prices as low as possible, and then I'll probably just rebuy wherever that is. If there happens to be a breakout, I'm not really a breakout trader, because a lot of these breakouts, usually when they try to happen at all-time highs, sometimes it fails. So I'm more of a support oversold trader. That's why I just wait for essentially a large dip. QQQ, NASDAQ ETF, that support was broken to the downside, and mainly because of Google and Tesla earnings being negative. And we can also see it has been fading down into this downtrend for almost 2 months now, definitely 1 month of downtrend. And so if I just draw one trend line above these price resistance points, I could also draw the support triangle. We're in a falling wedge pattern outside of that falling wedge. If I use pivots, we're right at S2 support. S3 major support is down here at 661, so we'll just mark these levels. We look at some EMAs, right around the 100 EMA, 681. I'll put a blue circle. If it's extreme, 645, 661, 662 for that downtrend. On the weekly chart, we already had the double top and the lower high in this circle zone below 735, 720 area. So we just lost that R2 pivot on 695 on the weekly chart. And we're actually at, it's hard to see, but we're actually at the weekly 20 EMA. So we could have a little fight here between the bears and the bulls. Earnings really does matter. That's why I'm not going to forecast it too far into the future. All we have to do is just wait for the earnings and interpret it, the numbers for a day, and we'll see the direction. Dow Jones, weekly chart, testing the support pivot of 518. It was overbought for a little bit back here, not extreme, however. So still on this Dow Jones, we're fading into that pivot point, 516, support at 513, and it has been fading. However, that's the bear case. Remember, this is the Dow Jones ETF, though. There's many companies in there and reporting earnings. Sometimes when we break above this EMA support level, or just pierce as well, sometimes we have the reversal. So I'm not going to call this as the end-end finale of the market, because if it just breaks out of this, it could actually be a higher low spot. That's why I will know we're having a problem if we break below 514 and then fall down to like 505. Very dangerous to be extremely directional unless there's a lot of catalysts. IWM pulling back to the weekly zone of this like 12, I think this is my 12 EMA. 288 on a weekly chart is that support level. Resistance 294, it's pretty high above there. Switching to a daily chart, it's fading down, trending into our 50 EMA. We lost this 292 pivot on a daily. And so if we're looking at oscillators for small caps, the stochastic RSI is oversold, but the regular RSI is only 47. So this is not an extreme level. It's not even near the 200 EMA zone. It's not, there's no momentum on the MACD histogram. It's just consolidation, looking not interesting to me in terms of going long. So I'm just going to skip it. I'm not going to touch this. I'm going to just move on. Oil had a nice rally. And I do want to point out that, yes, the indicators don't always work, but there was a very large MACD histogram that I probably should have played more aggressively. I'm personally not so much a news trader. So when things are even though this is a beautiful trade of potentially 30% volatility, for me, most of the entry for me is a technical support level or technical MACD. But because there's so much news, personally, I'm just skipping this. So I purposely did not trade US oil. And I could have entered here, but I traded other things, so it's okay for me. But if we're looking at the latest information, it's not extreme on that linear regression. We are pulling back because we hit that shooting star that popped out to 142, 140 range and is pulling back right now. These pivots here, the support level of 130. So we're trading between 130 and 140. Natural gas. Interesting, there was a daily double bottom here. somewhere in the zone above 1026. And this is also just playing supporting resistance levels, resistance 1080. Interesting to see, will this actually lower high and keep getting shorted down? Because actually natural gas has some support price at $10. So not even using indicators, just every time it gets to around $10, 10.15, somebody closes the short and basically buys, goes long. So the next level that I need to see if this is going to be true on natural gas is the higher low here. Higher low 1050. And if that holds, then maybe we can resume the uptrend. But if it rejects down, then it could be a short opportunity. Go faster here. Gold still consolidating between 381 and 363. Even though there is this momentum and there's this little squeeze that's happening, it's still the end of this downtrend. So I understand why it's not uptrending so much. I do want to highlight the difference in technical chart pattern between GLD, gold ETF, and oil. This is price action below the red EMA with the death cross on gold. If I rewind to oil, we can see in the past that the price hit the 200 EMA, did not fall below the 200 EMA. It's still uptrending, and then it made a higher low on news. So that's why oil went up and gold is not working so well because it's death crossed right now. So I'm still not long gold because I think it's just kind of too expensive. Although there's other trades that I'm interested in. Silver is basically the same mentality for me. It could have a higher low as to be fundamentally and catalyst driven, but there's this large momentum of the squeeze. So I'm expecting maybe some kind of pop up. It just might not be the mega rally that we're looking for unless there's some kind of big news change. Resistance 54, support $50. Let's do SMH. So SMH is still in this downtrend. The price is below the 20 EMA, below the 50 EMA, downtrending in this price. On this weekly chart, I do see a head and shoulders type of pattern. The next level of support is 535 to the downside. A lot of support zone open left for this ETF. Support at 507 as well, and then 465 support as well. It could be downtrending like this. So this is what we're seeing here. And just remember though, just because it's downtrending, at some point, maybe there could be a little bit of short squeeze. It just really depends on the buyers. But in terms of daily chart massive momentum, I'm not seeing anything yet. Because even in the April start after earnings on March 31st, 2026, it was already building that bullish momentum. And then there's that flash stochastic RSI oversold. And then we had really good earnings that week and the market flipped around, went bull. It's not exactly the same right now. It almost looks like this needs another 1 month to build the squeeze indicator. DRAM is basically tracking SNDK. Still, I can see the head and shoulders pattern, left shoulder head, weak right shoulder, but it's still valid with the support of $60. So 60s are level on the charts that the price needs to stay below for the pattern to come true. Anchored VWAP. So we're also below VWAP, which is bad. Anchored VWAP, $60. So 60 was that real mega number that we need to hold above, but it's not happening. So the same is true with these MACD histogram and squeeze indicators. Stochastic RSI is not even extremely oversold. And DRAM looks like that area of value would be first 47, 40, then 35. That's what I'm looking at. For support, resistance is 60, 65, 70 as well. SNDK. We are downtrending here in this zone. below 2386, 1937, and 1600 as well. Head and shoulders on SNDK, neckline at 1575. If this is technically true, even though we have earnings, SNDK was supposed to fall negative 50%, and it's probably not going to happen unless earnings is really bad right away. That would correspond to almost the 250-day to 300 moving average zone, which is very low. And if we look at oscillators, again, that histogram is building. It's like right in the middle. RSI is not even oversold, although that has not happened since April 2025. So SNDK, to me, needs to get cheaper for me to buy. When it was way up here at 2,300, too expensive. Price needs to come down, and they need to have a stock split, in my opinion, at some point. So support at 1355, 1192, and 989,000. Resistance at 1731 and 2000 as well. Okay, let's speed up here. We're going to end faster on crypto. Not much happened on crypto, except we had this pullback, and that was a little bit what I was saying the past 1 or 2 weeks, is that it could rally, but if it doesn't rally strong enough, there could be a pullback. And on Bitcoin itself, I'll just fast forward to Bitcoin. There was a 4-hour golden cross, but at the same time, on the daily chart, we did poke out of that Bollinger Band right on right on July 21, 2026. So this is what I'm saying is the no FOMO mentality is I try to buy support, and then if I miss it, I just kind of skip the trade. I don't chase too hard on July 21. Although I bought a little bit, so I'll buy a little bit, but I'm not all in at this spot. I just bought a very, very small position for like a 5 years hold or like a 1 year hold, because I believe that based upon these charts, if we're still on the death cross and lower low, lower high downtrend, lower low, lower high, lower low, there could still be a potential chance for some kind of upside down head and shoulders. It's still death crossed, that's for sure. But I'm waiting to see, okay, was this MACD bullish momentum actually real? And furthermore, when will the weekly bullish MACD and squeeze and RSI and stochastic RSI actually break bull? It has to happen on a weekly chart first. So because we're under this 200 EMA, this is how I'm going to play Bitcoin and crypto. Is I still believe it's going to go up in the next few years, long term. But short term, it looks like it could reject, because on a weekly, we just kind of barely rejected below 67,000. If it gets like this and goes one more lower low to around 50,000 or 55, which is the 618, which I'll draw here, I might long more there. I bought a very, very small position just in case we happen to break bull during this whole earnings season, almost like a small little hedge. But I'm not really going all in until I see a mega pattern, meaning like a massive bullish divergence like we had in 2023 beginning, or I need to see the higher low, higher high uptrend, or if I'm very conservative, wait for the golden cross and then enter there. That is not happening right now. The only thing earliest I would say is maybe because we're 50% down, is maybe we're about halfway to the downtrend. We're about here in this zone that I marked last time, below that EMA. So we can keep dropping, because sometimes Bitcoin drops negative 80, negative 90%. So that's what I keep saying. If it keeps dropping like that, we could get to $20,000, $25,000 Bitcoin, and then definitely I'm going to enter there. But we're just basically flirting with this 56,000. We're just barely here in this zone in the price of 55,000. And I'm going to see if that's true or not. 55, 40, 27,000. So my experience in crypto is no matter what anybody says, is if the price action is not going up very strong bull, like we had October 23 to March, April 2024. In this circle, if the price is not doing that, then money and capital flows is not flowing into Bitcoin. It's basically exiting a little bit. There is some inflows on ETFs, but we had a bit of a sell-off. But I hope you understand what I'm saying is it should be very obvious when we have the big bull rally. I don't have to guess. When I look at the charts, it's just going to be very, very obvious once we have the golden up cross, and then that's when all the traders and algos will just rush in as bulls. It's not quite happening yet. So that analysis is very much aligned with how I look at least the top 5 or top 10 altcoins. Let's speed up here, and Ethereum on a daily chart still in this downtrend, lower low, lower high, lower low, lower high, lower low. We had that double bottom relief bounce. And yes, this histogram is pointing up, and this is kind of late analyzing it like this, but it had the bull divergence, and then we're below resistance right now. So Ethereum, very simple, is we need to hold above 1800 and 1725. 1800 zone and then 1725 zone. Must hold above there. High, low, high, low. Try to get this higher high to 2161. XRP, very similar, but you can kind of see what I'm saying is maybe there's upside down head and shoulders. There was a little baby one as well. Maybe this is real. So if we hold above 106 and 103, maybe we're in good shape. That's why these 1 or 2, 3 days is because of earnings volatility sell-off, like Tesla crash, negative 15% or negative 20%, I should say, pulled back, for example. So Solana, and that happened on crypto, is correlated. Solana, higher high, higher low, higher high, higher low. Can we make another higher high to 85, 90, 95, $100? If I draw this trend line, we're actually below the trend line. So that's actually not a good sign in the short term. So that's why I'm not extremely bullish yet on Solana. We have the weekly death cross as well. That is concerning. That is concerning. The weekly death cross, that's something we don't want to see. Because even though we have this massive bull weekly divergence with the squeeze that's happening, if there's a weekly death cross, maybe Solana might even go all the way back down to like $20 or $10 if it's extreme, right? I have to always prepare myself for the case that what if in one scenario AI chips keep improving, that capital expenditures keep increasing, the DRAM and storage and memory supply chain problem continues, prices remain elevated, although I believe some products are actually on sale right now, but in the consumer world for electronics. But we have to realize is, what if capital does not flow into Bitcoin as fast as we think? Right? That's just one scenario I need to just have in the back of my mind, that in case everything crashes, I'm protecting myself by using a very, very small position size on crypto right now, that if it even crashed like negative 50% or negative 25%, I'm actually okay. I can survive that. So I'm not all in yet. Again, perfect example in Solana is there will be a time in the future, or there should be a time in the future, where we make that higher low and we stop downtrending in the price, make the higher low and higher highs in the price, some kind of support forms in a triangle, then we get that breakout. And that's when the bull market will come back. Not happening yet. This almost looks like, just turn off all the indicators. From all-time high to all-time low, for 25, 26, about 70% down. In the worst, 21 down to 23, Solana went down over negative 95%. It went down negative 96% discount. That's a buy. That's a buy. Remember, I treat crypto like I treat collectibles. These are digital token collectibles to me, unless they have some catalyst change. I treat it like Pokemon cards. I treat it like baseball cards. I treat it like valuable collectibles, art, except it's digital. It's not an NFT. It's a real token that has utility. It's a meme coin platform as well. Very fast. It's great. Solana is great. But at the same time and this is my long-term view, AI is more important than crypto. We use AI every day. AI is infused into almost all internet search engines now, most of them. I use it every single day. Not for it to tell me what to do. I use it for research. I get the information and the summaries faster than ever before. So even though we're in that world right now where things are moving in seconds, when it used to take minutes or hours or days to compile the information, I believe this is my mindset for investing, and I'll just end here. The human emotions, humans, we live here on Earth. We're still a part of nature. Nature has its own speed. It's not the speed of technology, it's the speed of nature. We think about even like trees and vegetables or fruits, or even the ocean has its own natural rhythm, its own natural wave pattern. Vegetables don't grow in one day. Trees don't grow in one day. It takes time. It takes years, takes months, takes days. So humans are a part of nature, in my opinion, and humans in general have that emotional cycle as well. It's longer term. It sometimes takes months and years for all of the bulls to give up in a bear market, meaning the bear crash. It takes months for all the bears to give up and to go back up into a bull uptrend. So that's why crypto, sometimes we have to wait 1, 2, 3 years for the bottom. Historically averages around 2 years. So this downtrend might not be over. The only thing that will change it around in my mind is earnings, stock earnings. AI needs to have massive bullish catalysts, or AI has to crash and then rebound, and then maybe crypto will rebound up as well, just following along. So in summary, I'm not going to look at every altcoin today. We're just going to end here is we're still in a downtrend on crypto. So until it reverses and goes up, I am not going to tell myself or anybody else to buy anything. It's not financial advice. It's self-directed accounts. People are allowed to do and make their own decisions. Hopefully, though, we are making the right decisions using strategies that actually work. To me, it's a matter of patience and discipline. So sometimes some of my strategies says hold for 400 days and then just auto sell, like that's the average. So that might have been true for, this type of zone. Hold it for 400 days and just get out of there, and that would have been the top zone. So it might not be the greatest news for the next 3, 6, 9, 12 months for crypto, but it will revive at some point. Right now, all eyes are on semiconductors, AI, memory, storage, SNDK. That's what everyone's looking at. And we could be looking at a temporary top as well. So sometimes the smart thing to do is, for me, if I made some profit or loss, but last week I had profit trades, I don't really have to do or force any action. You just wait for the next setup. Thank you so much for watching. If you like this video, consider liking, click subscribe, share this video with your family and friends. And it's a big earnings season. There's a lot of data coming out. but we shall get through it. Thank you, and I'll see you in the next video.